Test 1 2. Microphone check 1 2 3. All right. I'm going to kick this off here. Live stream on Sunday. All right. Just getting my audio levels finalized here. But I think we're good. All the numbers look right. So, here we go. Now, I wanted to take a look at this masked investor video. I'm going to ease into it today, because I haven't really done too much all week with this stock or this phenomenon. So I did let this play earlier, and I was trying to read the captions, but it just didn't work out. So let's see what we got here. I think I know what this is.
Guys, it's your boy Team I am the Masked Investor. Thank you guys very much for tuning in right now, no matter what time it is, no matter what. We appreciate you guys for being here. Now, what I have for you guys here are the top 5 catalysts, or the top 5 most important things for AMC theaters this year. They are in no particular order. I mean, I guess number 5 is probably the most important thing, but they're in no particular order from 1 to 4. Number 5 will definitely be the most important thing. So let's skip straight to it, guys. First the intro, then the info. Let's get it.
Cared who I was till I put on the mask.
God, I hate his intro so much. Jesus.
Smash that like button, press subscribe. That definitely does help support the channel and help get the message out. Now, let's talk about some of these catalysts, the top 5 most important things for AMC theaters this year. Now, starting off with...
Okay, top 5 most important things this year. Is it going to be a bunch of movies? Which movies? I bet that'll be at least one.
With number 5 in no particular order from 1 to 4, I guess, or sorry, from 4 to 2, I guess. We start off with number 5 as the movies, okay? The actual movies. What are people going to the theaters to do? The movies are a very important part of what is to become of AMC theaters this year.
Don't care.
In the next 4 quarters. So let's just take a look at this, guys. We have a few big ones coming out here, mainly with Avatar 2 coming out at the end of the year, which is
okay, whatever.
Great. And the rate is not really happy. It's J-Lo. In this movie called Uncharted. This
I like how he's like a movie reviewer
is
now.
going to be a very interesting one. This could
like
actually
a part
be
of
a
what
pretty
they do.
successful movie in the box
Let's
office.
talk about
I am
the
looking forward
movies.
to actually watching this movie. Forget trying to break records, and you keep looking at a
okay, what's the next damn catalyst?
A Batman.
Oh God.
Not expecting, but Morpheus, Sonic the Hedgehog, and Ambulance are all coming out right in the first week of Q3. Bolster huge. Earnings is going to be huge because.
All right.
So moving on to the next one, guys. Earnings. Earnings is going to be a huge one. This would be number 4 out of the top 5 in no particular order. Earnings is going to be huge because we need to see what we have done here. Now, there is an estimate that for Q4, the earnings are going to be negative 15 cents per share.
Sorry, let's get it in. Let's get it in 60 frames
That
here.
would be a step up in the right direction, because that would be a huge step towards potentially seeing it become profitable. It has here that B. Riley issued estimates for AMC Q4 2021 earnings at negative 15 cents per share, Q1 negative 41
okay.
cents.
I mean, this is
Negative 41 cents per share, which means a step back. Q2 14, which is
this is a fundamental catalyst. So, talking about becoming profitable, hopefully. I mean, okay.
That to me would be amazing, having this company become profitable, have zero cash burn this year. That would be a huge step in the right direction from a company that was underwater, just grasping for air at the beginning of 2021. Okay, that would be a success.
Can we move on?
I'm highlighting metric banger to me. The next one, guys, new revenue. Now, I'm highlighting the new popcorn revenue specifically, but I am looking at new revenue in general. You see here in the investor relations website, AMC Entertainment to expand its business beyond the theatrical exhibit and enter a multi-billion-dollar popcorn industry. I am looking forward to see what kind of revenue this actually brings to the company. Headlines is great. The talk is great. I want to see bottom line. I want to see,
because that is such a profitable industry. Oh my God. I mean,
turning the company
somebody correct me if I'm wrong,
and maybe bring a unforeseen amount of money to a specific quarter. Maybe it's Q1 that helps bring that Q1 estimate of, what was it, negative 60 cents per share. Negative 60 cents per share.
Got it.
I'm very interested to see negative 35 or negative 30. Who knows, right? We'll see what happens here. I'm very interested to see what other types of revenue can be added to the theatrical chain, right? Now, this could be the sports aspect of it. This could be the food aspect of it, like nuggets. This could be the popcorn, adding that onto
nuggets.
it.
That
this could
is
be
the key right there.
Added on renting
nuggets.
theaters, maybe several different additional lines
That's all
of
they
revenue.
had to do.
Now, this I wouldn't specifically say as an additional line of revenue. This would be more like padding the stats. But I want to see how else we can change this business into just a more successful one. We don't have to completely sell out, but just a more successful one around, because the bottom line
getting the plant-based nuggets, to my mind, that's pretty damn close to selling out. But whatever.
When it comes down to
okay,
now
what's the next one? Oh.
When it comes down to keeping the business alive. Now, the next one I want to keep an eye on, guys, is crypto. Crypto. Can we evolve in the world of crypto? We have the NFTs now. We are accepting crypto now. Can we evolve in this world? Can we get an analyst working with AMC to help buy and hold tokens or coins whenever it's acceptable, in order to turn a little bit of a profit with AMC Theaters? If AMC Theaters had $1 billion of cash in 2021 at one point in time, $1 billion in cash. Imagine if that $1 billion was in cash.
Oops. Oh. Yeah, it's been a minute. I think that was subliminal. A little crazy with the clicks here. It's Sunday, so I blame it on Sunday.
It's not the whole damn shebang.
Okay, so it's anyway, it's crypto. I've been repeatedly asked when AMC expects to routinely accept Dogecoin and Shiba Inu for any and all payments made via the AMC website and mobile app. I'm being told that we are still well on track for the promised Q1 implementation, with exact timing most likely in March. So the end of quarter one. I was trying to get a chart here. And when I accidentally closed the freaking thing. But okay, Dogecoin. It just keeps diving. It just keeps diving. When and I'm trying to remember when the hell they announced that they were gonna accept this. I don't remember, but I'm thinking it was back in here somewhere. When Dogecoin was higher. Okay, what about Shiba? Shiba Inu, I mean, it's going to cost like 4 billion Shiba Inus to buy anything. Because it is, I don't even know how to say that, 0.000028892 dollars per. I mean, it's still higher than it was over here, I guess, but at least it only has 4 zeros and not 5. But why? This is such a big fucking deal. I don't get. Yeah, I mean, those are two shitty crypto coins.
But just portions of that cash in something that's not going to be missing, what, 6.5%? What's the inflation rate right now? 6.5%? Like, we are losing money.
Going to accept it via BitPay? If so, they're not going to be holding any crypto. They're just accepting it from a third-party payment acceptance firm. I've already looked this up once. Yeah, so he's so far off base, it's not even funny. He's talking about, oh, something that doesn't have blah, 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 the same perils as a dollar. AMC will be holding this Shiba Inu and they'll whatever. So they use the payment service provider BitPay, which accepts the crypto, translates it, converts it into US dollars, and then sends AMC the US dollars. Kind of like, I guess, what Robinhood or some of the other brokerages do that deal with crypto. You don't actually hold it. They just kind of reserve it in your name. It's similar to that, but it's not a thing where yeah, see, this is from November. Okay. That's when. $15th. Right here. Better lock that sucker down, okay? So, oh, yeah, okay. Stop. Okay, anyway, the Shiba is here, so it's down, I don't know, 45% since that was announced. Yikes. Our friends BitPay decided to support Shiba Inu specifically because I asked, so AMC can take Shiba Inu for online payments of movie tickets and concessions. AMC Theaters to be the first BitPay client to accept Shiba Inu because the apes wanted them to. Why? Because it's the next big crypto. Of course. Yeah, that Twitter poll was October 29th. Of course, that was here. Oh my gosh. That was here. At a point where the Shiba was 61% higher. So I wonder if they still want, I wonder if we put that poll out again, what the results would be. But in any case, they're not going to be accepting it. I mean, they're accepting it via a third party who is going to send them the cash.
The whole damn shebang, but just portions of that cash in something that's not going to be missing, what, 6.5%? What's the inflation rate right now? 6.5%? Like, we are losing money with that cash right now. It is a nice war chest, but can we invest it in something that's going to actually grow with the company? So that's my...
They're not investing it. They're not investing it. They're accepting US dollars. I mean, it's not that hard to find out. But this is the,
Thing right now, guys, is what can we do in the world of crypto and NFTs? And the last thing, people, is you. The last thing is you,
Me?
the investors, the
Me.
team. Also, the narrative that's going to be put out about you. I have here a great picture.
Put buyers, right? Buyers of put options.
But it is about a Wall Street Journal article that basically speaks negatively about the ape. So the big thing is like, how are you guys going to react to the stock? How are you guys going to react to the theaters? How convicted are you guys going to stay? And that to me is the most important thing. All right, guys. So these are the top 5 most important things to me for AMC this year, the top 5 catalysts, if you will. Hopefully we can have our...
Okay, so the movies, the other revenue streams, the earnings, crypto, and retail investors. All basic elements of the market. So that's a kind of a stretch. AMC should consider a spot of land in the metaverse, in my opinion, so they cover that space as it develops. Okay. Gone are the days when negative articles were the main drivers of info to retail investors. We listen and do our own DD. They can come up with whatever negative articles they want about AMC, GME, and other meme stocks. Toys R Us was unlucky apes hadn't woken up. It's a new day. We are informed and apes are not leaving. That's funny. No, you're not. You're not informed. I don't think anything AMC related will be a meaningful catalyst. All those will do is increase AMC's fundamental value, and unless that surpasses or greatly closes in on the current share price, it won't cause anything to happen. I mean, it'll help. It'll reduce risk in owning the stock, but it will be like throwing cups of water at a burning house. The top catalysts we need to look at are the negative ones that affect the liquidity of the hedge funds. The only person that's willing to talk about the real problem affecting the stock market, AMC and GME. The real problem? The one thing certain about the market is it will... Oh, this is some crypto spam. So here's some more. I just love that intro. A total mic drop. Oh, boy. Man, gets a lot of crypto spam on here. Many of us don't care about how much money the theaters make. It doesn't directly affect the stock. It was clear from the past earnings reports that it doesn't increase the price of the stock, says Lisa Ashton. You are using this channel to make educated financial decisions for yourself in GMI. Okay, anyway. I've all my AMC shares marked to sell at $25, but you've given me hope, so I'll change that mark to 26. So here's talking about fundamentals again, a controlled algorithm. I will stay even if we hit 0. I will then invest and buy 600 more synthetic shares. Maybe if one investor has more than the float, the SEC can finally say, maybe this is worth investigating. You won't be able to buy 600 million shares. AMC to accept literal frogs as payment. It's pretty good. It's a pretty good one. You're assuming Bitcoin will go up. What if they spent that billion on Bitcoin at 60K and now it's 40K? Like, do you hear yourself? Well, Brian, it's no worry. It's no matter. It's no thing, because AMC's not buying it. They're using BitPay to accept it, and that's it. Bitcoin, whatever other coins, Dogecoin, Shiba Inu. Is TMI bald like Trey? Scammers. Algo. Wow. I mean, let's do a social blade check here because I'm sensing some negativity. For once, it's not coming from me. Let's see. Oh, there he is, the masked investor. I don't remember exactly when he started switching to like different channels, multiple channels, a different channel in the morning, different channel in the evening, pizza in the morning, pizza in the evening, pizza at supper time. But that to me, I think it happened probably around here. And his channel got deleted a couple times. And I don't know, he just kind of started going off track. Anyway, catalysts. Is this N2S Finance? I'm seeing a lot of bullshit from them. I'm seeing a lot of it. Saw that one up there. I know I saw one earlier, I think yesterday, but not familiar with this one. Not familiar with this one, so let's check it out.
Over here in AMC in the community, the latest topics seem to be about the SEC, the DOJ, and those sorts of regulatory bodies. In the sense that we are not seeing much action on the surface from the SEC, from the DOJ, and I want to address that in this video because whilst it may seem like not much, we do have some stuff to report on, and also there is some things going on behind the scenes which I think are worth noting. So before we do dive in, can I ask you guys to give the video a like and of course subscribe to this channel, but do as well remember this is only my opinion and it is not financial advice. Do your own research and be very careful when investing. But yes, we are going to now dive in. So I'm going to just start off with the main topic for this video, is speaking about the SEC, the DOJ, and what they are doing. Because right now a lot of anger is falling on both of those for potentially not doing their job. Because we've seen the price of AMC fall day after day after day. We've seen some very dodgy action on Friday, where we saw the price drop from $23.11 to $22.99, meaning that those call options were not in the money, and a lot of people did lose out because of that. And all the time...
Oh, all those call options, huh? All those call options. Right. Right, all these call options. 23? Yeah, it was 23. Open interest of 4,400. Volume of 16.8 thousand.
Time people are wondering, where is the SEC, where are they stepping in on this action, and what is going on? And of course nobody knows for sure because we do not work at those institutions, but we can have a look at what we do know and get a rough estimation of what is going on over there. Now the first issue that I want to address about the SEC not taking action is, it may seem like that on the surface, but what we already know is that the SEC and what goes on behind the scenes is unknown to us. Because if we think about this one, if they are launching these top secret investigations or these really big investigations, they cannot really leak all of that information to the public. Because the minute that we know it, it's the same moment that the institutions that are getting investigated or getting looked at know the same thing. And that does give them the opportunity to potentially cover things up or, do things along those sorts of lines. So to release this information to the public is
Very good
risky, and it
logic
is usually
there.
something that we see done later on. For instance, if we go over to them on Twitter, this is the US SEC on Twitter. Come down to the tweets that we do have. We have a lot of tweets saying that we are looking at things like the results. So we're having the result of this case was that 3 Florida residents were charged in a multi-million-dollar insider trading scheme. Come down a bit further, we're seeing a few things like changes, but really when it comes to the main cases that we're looking at, it's just the results, because we don't really talk about the launching of the investigation until the results are finalized. Because on the one hand, it is kind of important to mention that they're doing a launch into certain organizations, and that's what we're seeing from the DOJ. We see
Okay.
so do remember that. Whilst it may seem like an easy thing to do on surface, there's probably a lot going on. The more it depends how quickly they do act, but really to expect action from them now, whilst it would be nice, whilst it would be important in my opinion for the economy, because the longer this goes on, the more the shorts will have to cover, and the more it will cost the entire economy. Whilst it may seem like an easy thing to do on surface, there's probably a lot going on behind the scenes. Anyway, we have another piece of DD from Reddit to go over as well, speaking about
Oh, yay.
this issue. And it is pointing to some of the potential corruption in the SEC, in my opinion. So whilst we do have the benefit of the doubt that they are potentially doing some good behind the scenes from what we have already seen, we also must look at what is looking quite bad from what they have done recently. So this was coming from Gorilla_Gambler. This was published 23 days ago. So if you're wanting the
Great. That's great.
context, there it is. And it says the maths add up. Proud of the SEC and Gary Gensler making hedges pay. And it's got all of these facepalm emojis at the end. So coming back to where we are on Twitter, we can see this one. Wedbush Securities Inc. has agreed to pay over $1.2 million to settle charges arising from unlawful, unregistered distribution of nearly 100 million shares of over 50 different low-price microcap companies, and from their failure to file suspicious activity reports pertaining to those transactions.
training?
So when we have a look a bit
What
lower,
in
we'll see
the
that
fuck?
to file suspicious activity reports pertaining
Portraying.
to
Wow, okay.
those transactions.
I'm not going to say anything. I'm not going to say anything, Tony. I'm not going to say anything. I'm not going to say
So
anything.
when we have a look a bit lower, we'll see that, little info that they paid this little fine. But come down even further, and we can see this from the same user, which is also very good stuff to look at. It says $1.2 million fine over 100 million naked share fraud. Nobody's been held responsible. Nobody's gone to jail. It's business as usual. WTF. And the source is linked below if you want to have...
No. No, 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 no. That's not what that's saying. It's not what that's saying at all. It's saying unlawful, unregistered distribution of 100 million shares of 50 different low-price microcap companies. This would be like if you created shares for your company and just sold them without registering them with the SEC, without going through the proper, filing the proper paperwork. It's not naked shorting. It's not the same damn thing. Everything is not naked shorting. Anytime there's anything that's unlawful or unregistered or unaccounted for, it's naked shorting. No, it's not. It's not naked shorting. This confirms naked shorts exist. No, it doesn't. And we know that it does in a legal capacity anyway. So, seller boxing does occur. Oh, that's that one thing that Thomas James was talking about. I forget even what that stood for, what it meant. Hence, I'm not surprised why we wouldn't own the float 10 times over. No, this is talking about a microcap stocks, penny stocks, most likely. I mean, what does this have to do anything with AMC or any other stock? Nothing. Nothing. So, okay.
Data like
That's
that, it is very, very hard to back that statement up. All I'm trying to say is that there's a really good DD here because, like I said, I do want to have the benefit of the doubt that the SEC are doing a good job. However, when we look at data like that, it is very, very hard to back that statement up. All I'm trying to say is that the SEC aren't known for being the quickest to act, and also if they are doing something, it's unlikely that we will hear about it right now. So, whilst the SEC may be taking action, would I rely on them as the catalyst for the squeeze? No, I really wouldn't. I think it would be in their best interest to react on it and do something about it. But of course, I do not work there, so that is for them to deal with. All I know is I'm still feeling very confident about AMC. Tell me your opinions down below, and thank you for watching the video. I'll be back to see you all in another one. You'll be seeing the end to
Is that it? Okay, good. Yeah, no. It's a crypto spammer. Yep, sure is. Mr. Roger Ver. Okay. So, yeah, that's... Let's go over to Reddit. Let's go over to Reddit. If the CEO wants to issue more shares this year than I want, I want a share recount. That's it. Edit. The point of my idea is to make a deal. If the board wants shares, then making a share audit a part of the deal. People calling this post FUD expect something for nothing. I want the truth out of everyone. I want the truth for everyone to see. Okay. No, I don't think that they really do. They want something that confirms what they believe. It's not the same. Best I can do is share a recount and no share dilution. We as a community have already saved AMC from bankruptcy. We gave them new ideas for business such as retail popcorn sales and NFTs. Great ideas. We have promoted the stock company beyond anything even the best market company could achieve. Least he, Adam Aaron, can do is give us a recount without further dilution. Okay, shorts and hedgies would use dilution to drive stock price lower, and it would help them escape the squeeze. No dilution, no new shares. There's already a few billion synthetics out there. There's no evidence for that, but whatever. I 100% agree with this. Everybody profited from this. The board even sold some shares. Okay, nothing wrong with that. But we, the apes, still waiting in the shadow for our bounty. We won't settle for peanuts. Well, you should have sold your shares when the stock was higher than the price that you bought it at. That's the idea. You buy at one price and you sell at some price that's higher than the price you bought it at. See, that's the basics of investing. That's the basic investing thesis. Buy low, sell high. Not buy high, sell low, or buy anywhere and hope for way higher so you could sell. It's not really how it works. And you know, anybody can tell you that the number of people who have had one trade, one stock that they have made their entire fortune on, it doesn't happen like that. It's not how it works. Yes, sometimes there are anomalies. There are freak things that happen, like we saw in January and we saw in June. Those fall into that category, but with as much expectation as there is, do you think it's really going to happen? Do you think that whoever, the elite financial interests, the market makers, the hedge funds, institutions, AMC itself, do you think that they would want this to happen? And do you think that they would not do anything that they could and to make it not happen? Such as, you know, I don't know, slowly covering short positions over time, reestablishing new short positions, which is what they do anyway. Because if they have, if there hasn't been short covering at these low levels, you know, I don't know. Now, there is a Vortex update in here somewhere. Here it is. So this is from Friday. And they say, estimated short interest of free float is 17%. Cost to borrow is 1%. Utilization 75 is down. So your days to cover is up. That's basically, as far as I could tell, that's on low volume. That is because of low volume. So it's not really that indicative of anything at this point. Exchange reported short interest. We're seeing this scale. I'm trying to see what this is. Exchange reported short interest. 2040-60. What is at 60? I don't see anything at 60. I see 96. I see utilization at 75, but that's not on. Exchange reported short interest of percentage of free float is not on, so that would be the exchange reported short interest. So I don't know why it's, unless I'm tripping here. It looks like 60. Looks like it's just above 60. Quite sure there. And then Friday's live changes. Returned shares 500,000, borrowed shares over 750,000. A little bit net positive borrowing change, little bit short interest change. This estimated short interest, which reflects this data, is 89.5 million. With 103 million, 104 million on loan. So we see this number basically going down. Now, if we come to something like chart exchange, we can look at patterns. So we can come to short volume. We can see that on Friday, 64% short volume. And it's been above 50%. For a while, it says the short volume 30-day average is 57.5%. So that's something. You just scroll back through here and you see some 30s popping in from November. So I like on this, if you put this on volume stacked bar, and then we add the price, and you can zoom this in, you can get a little bit better perspective here. So you can clearly see, I think you can, it seems such, that when you see, you can see the price and the short volume. So we don't have, this is all short volume here, all these bars, and it's broken down into off exchange and on all these exchanges. So if we wanted to see, well, we don't have a, I don't think we have a, shows long volume on here. So anyway, let me go back to this. See the short, when you see the short volume rising, generally speaking, you see the price falling, generally speaking. So like the last few days, clearly see the price falling there, here, etc. here. That's just short volume itself. It doesn't indicate short covering or anything like that. but we can see that we go to percentage short volume by exchange. Let me go back to the current page. Say 30 to 40% of that is off exchange. Off exchange. So if we put it in volume line or stacked area, you can see this white area here is the off exchange short volume. So that would be dark pool or OTC, ATS, ADF, TRF, all the off exchange order execution venues. So yeah, TRF, ADF, or the ORF, the over-the-counter reporting facility during regular trading hours. So now it also says not every exchange, reports the short volume free of charge. So that's cool. I'm not sure which ones or why they even mentioned that, but so so we can look at here. We can look at one thing I've noticed. Let me just point this out. We've got total volume reported down here. So 40, 44, 38. Now, if we come to the actual historical data, we'll see a little bit different numbers. 49, 59, 45. So a little different. Assuming that that's, I guess, taking into account the after hours or something. I'm not sure. Not quite sure. So this brings me to something else that I wanted to look at here. Talk about log the float. Now, people might recognize this name right here, the abuser of intellect, which is, well, this person has been putting out what I would deem to be FUD, fraudulent information, nonsense, for months. I'm kind of convinced that this person is a shill, legitimately a shill. I don't know for a fact, but they kind of have all the markings of a shill. There's no way that they are a PhD, that I can tell. There's no way. So let's get into this here. So we have this log the float page that they created, I guess. And it's one of these harebrained schemes to count the number of shares that are held, as if any of the other methods have, been any indication of anything. They haven't. But here's another one. So add your shares without compromising. And how do you do it? Oh, you take a screenshot and you send that, as if those can't be changed. And but remove your personal information first. Oh, okay. Yeah, I'll do that. And they don't have that many logged. It's pretty pathetic. So 513 million shares, 15 million retail shares have been logged and approved so far on the website. So, a small percentage. They want to get, I don't know, they want to get a certain amount so they can do their little algorithm thing and extrapolate the data and come to the conclusion they want to come to, basically. But here we go with this naked proof. So, starts out with a conclusion. which is a red flag already. But AMC and GME shares have been illegally diluted by the billions, not by their respective companies, but by predatory practices of some market makers and brokers taking advantage of option markets, loopholes, T plus infinity, and an ineffective and complicit SEC. Here's some more evidences in support of a well-known thesis on the main street that synthetic shares exist, and they exist by the billions. Okay. Central argument. Based on the now available data, some relatively small payment for order flow brokers, the largest being Webull, have sold to retail investors more AMC and GME synthetic shares than the entire outstanding shares at points, and currently house unbelievably significant number of retail shares, disproportional to their size compared to other major brokers and clearing houses, which is an undeniable indicator of ongoing market malpractice, illegal dilution, and shorting by market makers and brokers. Okay, so already some inaccuracies here. So let's look at the popularity of brokerages in 2021. So here's 2021, this range here. And we see that Robinhood, this only goes until July. This is on Statista, by the way. Statista. But we see Robinhood with about 7.3 million active users per month. And Webull, under half of that, but substantially above all the others at 2.7 million active users per month. Now, there also is an account here on CNBC from December that indicates 7 million account holders at Webull. So that's total account holders versus active monthly users here on this. So this is a January 2017 to July 2021 survey. It was released in August. So you may have seen these numbers go down more, maybe. So my dispute is relatively small payment for order flow brokers. Well, at least we know that over on AMC YouTube, I mean, here's Webull. Trey uses Webull, Masked Investor uses it, Short the VIX uses it. And I mean, a lot of these guys use it. A lot of them gave out promotional codes, promotionals, free stock, all that nonsense for Webull. Some of them still had it in their descriptions. Andrew Mo Money had it for a while. So Webull is, I would say, is one of the more popular brokerages. I don't know why, because it is actually worse than Robinhood in terms of payment for order flow and whatnot. Get worse executions. They take more of a cut. And you can see that that's documented as well. So Webull is, clearly it's more popular than Fidelity was, at least in July. Now that may have changed since then, but this is all I could find. But a lot of the heavy trading had already taken place by this point. So anyway, we have a question here from Media Dre. You think MOS is going to happen soon, like in January, like last year? I'll put it to you bluntly. No, I don't. That's my opinion. It's based on what I'm looking at, which is not which is less less biased, I would have to say, than what most of the other YouTubers are looking at. But I don't see this being really similar to last January. Couple big reasons why. Number one, let's look here. I have this all queued up here. So last January, you're looking. Okay, this is this is a mechanical thing, but in January of 2021, there were about half as many shares of AMC out there as there are now. That's because AMC has added shares relentlessly over the past year and a half or so. So before the pandemic, you're looking at just over 100 million shares. In the end of 2020, it started to, you started to have some shares added. By January, it's doubled. It's more than doubled at that point, and then it goes on to almost double again. So you have more shares now than you did in January. Also, the price itself being where it's at now. Let's come back to this. So you're looking at, these price levels. Let's do this. At the end of 2020, yeah, here's $8. So roughly $7.91, $8, 801. Where's 801? 801. Wherever, whatever. $8. There we go. Now, I don't need to probably, here's, so yeah, 2020. Basically, yeah, December 2019, from that point on, it stayed under $8 per share. So that creates an environment where people can buy a lot more shares. Plus, you have an environment where you have unemployment, compensation, you have stimulus money, you have all that stuff. You don't have that now. Unemployment's over. Stimulus is coming to an end, which is debatable whether it should. Pandemic is worse than it was then, but that's, I guess that's the way it is. But yeah, and if you look at the short interest, which I don't really have, let me see if I have it. See, I know I have the SEC report somewhere here, if I can pull it up real quick. You would see the short interest charts versus the price on like January, February area. Where is it? Let's see if I can find it. I know I have it here somewhere. So those are just a few things that are, oh, here we go. So this is the GameStop SEC report here, and I'm just looking at this to look at some of the charts for short interest and things like that, wherever they are. So you see something like this, similar with AMC. Let me see if I can find that. I'm going to say it was from S3. Maybe this is it. This is from this is from Friday. This is from January 31st, 2021. And it's the last trading day in there would have been the 29th, Friday the 29th. So so here we see price and short interest graphed here. So price in green and short interest in orange. Correct one. Let's see what we got here. First. Here we go. Oh. Good. This is good here. Okay, so price in green, and on the right scale, short interest in shares, number of shares in orange on the left-hand side. So what do you see here? You see the short interest drop. You see the price rise. So that's short covering. And here you see short interest rise and price fall. So that's short selling, right? Here you see short interest really picking up. You see the price being suppressed. And here's where you started getting to the gamma squeeze in May, end of May, June, early June. Right before, so this is June 1st. This is June 1st. So, wow, what an exciting time that was. So, get this off here. Here's June 1st. Right there. So, they're having, you know, you're at right around 30. So, the big one hadn't happened yet. It hadn't happened. And we see that little pullback there reflected in this candle right here. So if we were to put that on line, we would see it right there. Okay. So what happened after that? Have that. We should. Let's see what we got. First. And I'm going to get back to that article. A little bit off kilter here, but okay. This is the general pattern that you see. You see that inverse movement. But anyway, let's get back to this. So let's look at the data. Data utilized here is based on a web API data source through Apex Clearinghouse, which some PFOF brokers use. These brokers include Webull, Ally Invest, Twine, Wealthsimple, and M1 Finance. For a list of Apex clients, click here. The data and its presentation. Now, dig this, this language here. The data in its presentation are very simple and straightforward. One does not need any data analysis skills to understand it, and with a simple calculation, it becomes apparent that the system is heavily rigged against the retail investors, and nobody is doing anything about it. To learn more about the web API that we have utilized, and to learn how to download the data for yourself, follow this link. Okay? All right, let's follow that link. So now we have the naked smoking gun. So this is from a month ago. It was not posted by the same person. It's posted by a Kuntex or a Kuntex. I don't know. But look at all those medals. Look at all those awards. I can't even count. It's 45, and I mean there's like over 100 right there. That's a lot. And by the way, this is posted on AMC Stocks subreddit, which is like the off-brand one. I don't know why. They said that actually they said that it was removed from the main one, so I don't know. But so this is the DD due diligence that supposedly abuser of intellect who wrote this article on Log the Float, where that came from. It's based on this research. So I'm going to skip the edit here because, so this was posted on December 6th. This is a preface about APIs, in general, what they are. It's a way to interact with the website. Preface about Webull's cost distribution. Okay, so this is the feature that is being used with the API. This is where the data is coming from. And everything is based on this figure, this analysis. So Webull has a feature, an analysis called Positions Cost Distribution. Now, this is from Webull's website. What is Position Cost Distribution? I'm going to call it PCD. PCD assumes all free float shares were purchased and held by investors. Based on this assumption, the PCD analyzes the cost prices at which those shares were purchased, how these different price points are distributed at one time, and changed on a daily basis. For example, if there are 1,000 free float shares of ABC in the market, one day when the market closes is found that these shares were purchased and held by public investors at different cost prices, namely 10 at $5, 120 at $6, 100 at $7, 30 at $8, 100 at $9, and 640 at $10. This is the distribution of costs of positions of all free float shares at that time. Okay, so just to recap, it's going off the assumption that all the shares that are available to retail investors have been purchased. And it works off of that assumption. So with that assumption in mind, you will divide up, you will, based on the cost, the execution price, break it down into price ranges or price points. So doing that, you can get a breakdown of the entire float and see, all right, where did everybody buy the shares at? Okay, but the important thing to remember here is that it assumes all shares were purchased and held by investors, and it's basing this on this assumption. That'll come in handy in a few moments here. How is the PCD indicator calculated? So the positions cost distribution indicator is a technical indicator that obtains data from the transaction record covering the 13 national exchanges in the U.S. on a daily basis. The transaction record shows the filled prices of all orders executed during a certain time period, typically 1 business day. It indicates that the cost basis of the circulating shares are moving towards the filled prices. We will take these accurate filled orders as open position orders and the filled prices as the cost prices of new positions held by investors, adding the corresponding shares into the different price points. These transaction records are accurate data from the exchanges. However, we do not know which positions of investors were closed. The decrease of shares at each cost price from the previous distribution is estimated based on the profitable ratio. In general, the position cost distribution is an estimated result and is for reference only and does not constitute an investment recommendation. So important there. It is an estimated result because they don't know when people close their positions. They don't know. So they estimate that based on the profitable ratio. I don't know exactly how they do that, but that's what they say. But it's for reference only as an estimated result. So back in Tweedledee land here, they say, Webull states it obtains data from 13 exchanges on a daily basis and calculates the cost distribution from this data. They also state they don't know which positions of investors were closed. Well, they do state that. The following figure shows the cost distribution for AMC, okay, from December 6th. In this histogram, there are a lot of positions in the 40 range, but there are also positions in the single-digit range, as well as in the all-time high range at 72. If Webull uses data from exchanges, most probably trades, to generate this chart, how would they know if single-digit positions or all-time high positions were closed? Well, they wouldn't know that. That's the assumption that they're working on. Okay, they come right out and say we don't know that, but we're going to assume, for the purpose of making this easy and workable as an indicator, because we don't know, we don't have a record of we can't track each position. We can't track each position, but we can look and see where things were executed, and that's what they're going off of here. So why are there still single-digit positions and all-time high positions if they generate that data daily? Well, again, same reason. After all, it has been months since the stock saw these numbers, and they state they don't know which positions have been closed. Again, yes, that's exactly right. They do. You're missing the point. It's an estimated figure. The way Webull states how they obtain and calculate the data makes no sense. Well, I mean, maybe it doesn't make sense to this person, but it makes sense to me, and it makes sense to plenty of other people. This is not the only cost distribution chart that exists, but maybe there's a simpler way to calculate the data for the chart. No, probably not. What if they just use the positions by their customers to generate the chart? This DD will try to analyze if Webull is using the open positions of their customers. Okay, so this DD is trying to figure out whether they're using open position information from their customers only, even though it says right up here that they are using data from 13 national exchanges. So that's flawed to begin with, because directly against what the description of this indicator says. Directly against it. Okay, so then they go through the API here itself, and then how to get this cost distribution data. And we see that you get the ticker ID is a unique number. It's a like a serial number that translates to the ticker ID. Average cost, close profit, all these here, total shares and distributions, and this is defining these histogram bars here. Okay, so two properties: total shares contains the shares outstanding by the company. Distributions contains the data used in the app for the histogram. As Webull always shows the same number of bars, they are cluster. Okay. So the thesis of this DD is that Webull is using the shares of its customers. That means if you sum up all the numbers of shares from the distributions property, you know how many shares Webull customers held on the given date for the given security. And I say no. No, you cannot. That is not what is going on here. If you go off of that assumption, you'll see what conclusion is come to, and it's not supported by any evidence. So they're trying to claim that you could add up these numbers, this 99,355 and etc., to get the number of shares. Now, I don't know. Okay, let's go back up here. Oh, okay. So we don't have anything on this x-axis here that's indicating how to measure this. What does this mean? How many shares is this here? So, and that makes sense because they are estimating it. It's not meant to be an exact figure. Kind of like on balance volume. On balance volume is an indicator that will show you trends and divergences and things like that, but it is not telling you how many shares were bought or sold that day, how many shares are still held. It's adding the total volume to the previous value if the price, if you have a green day, or it's subtracting the total volume from the previous volume if you have a red day, in the same way, similar way that this position cost distribution is assuming that, okay, we have these orders that were filled here. We're just going to add those in to the existing histogram bars. But that's not exact. It's not, no, some people did sell. We don't know who they are. And it doesn't matter for this type of analysis. We're just looking at the cost of shares purchased. So clearly that's not being, that nuance is totally being missed here. And it's not telling you how many shares Webull customers held on the given date for a given security. It's just not what it is, because it doesn't factor in the sells. It says that. So how could you come to this conclusion? So now they're going to look at various securities on December 6th. They're going to look at common blue chip stocks and then ape stocks. So they're trying to they're claiming to get the number of shares, the percentage of shares relating to the shares outstanding and to the retail float. Also, another thing that I was wondering about myself is it says here that the transaction record covering the 13 exchanges, but we know that in addition to the exchanges, which there's 15 here, what about off exchange? Is that factored in? And we'll look at that further in a sec here. But coming back to this, down to the example of AMC here. Okay. So they say AMC, according to the Web API, there are 128 million shares of AMC on Webull. This represents 24.99% of the shares outstanding and 43.01% of the retail float. Now, again, first of all, this is not strictly on Webull. Not strictly on Webull. It says they're taking data from the 13 exchanges. So, there's that. Secondly, if we come up to this edit here, they concede, as some users point out, there's a possibility that numbers don't show the number of shares from Webull alone, but the number of their clearinghouse, Apex. Apex is the clearinghouse of various PFOF brokers like Webull and Robinhood. Now, I don't know if they're the clearing broker, the clearinghouse for Robinhood or not, but so coming back over to Abuser of Intellect's little thing here, they went ahead and assumed that it is. The data utilized here is based on a Web API source through Apex Clearinghouse, which some PFOF brokers use. Okay, well, but the API itself is at webullbroker.com, not apexclearing.com. So I don't know. Is it? Is it not? I'm not sure. There's no documentation for this API anywhere. It's literally not a public API, so you can't get documentation for it. So this is all mostly speculation, okay? But this is not speculation here. They say that they added up these numbers and got 128 million shares of AMC on Webull, okay, or Apex or whatever you want to call it. But we know that that's the 13 exchanges. This represents 24.9, let's just call it 25% of the shares outstanding and 43% of the retail float. Well, let's see here. Shares outstanding right now is 513 million. Let me go to FinViz. 513.3 it says here. Share float is 513.26. Now, that float number could be higher or lower. Well, it would have to be just lower, I suppose. Let me look on Fidelity maybe, but those numbers are a little bit off. Let's see how we can, let's see here. Shares outstanding. May not have the float. Because constantly, it is changing. So maybe we don't have it. Anyway, key statistics maybe? Anyway. Okay. So, FinViz at least is reporting it as 513 million for each. So I don't know how in the world you get this 43% versus 45%. Doesn't really make sense considering they're both 513 or thereabouts. So now they're using this to say that there are synthetic shares. I mean, that is a completely illogical leap. That's not what this means. It's literally not telling you that. It is a cost distribution, not how many shares are there. I mean, it's kind of a basic thing, but let's just go with this. So 24.99%, and this is where is it here? This following chapter looks at various securities as of December 6th, 2021. So December 6th is all these are from December 6th. So just off the top here, let's go to the historical price information and volume information on here and go to December 6th. So the volume was only 44 million that day. Okay, the volume was 44 million that day. So clearly, this is not telling you that there were, and like this one says here, but I'll get there. This is an aggregate number, supposedly. And again, it's to break down the costs, not the actual number of shares. So that's the first thing. You can just compare the volume and you can see that it's not the same. Now, if we come back over to User of Intellect's post, he says, so we just are coming back after following this link here. That was all we just looked at. So we're back here in this first document, how to interpret the data. The best way to present the data is to look at one single day and look at the range, such as the entire year from 20 to 21. Comparatively understand the data and its implications. Looking at one single day. Case study date 12/16/2021. The data shows there were 128, 441, 952, same number, shares of AMC sold to retail investors on Apex brokers. Okay, let's parse this out. The data shows there were 128 million shares of AMC sold to retail investors on Apex brokers on the 16th of December, 2021. Okay, let's look at the volume for that day. We only had 43 million total, so no, that's clearly not what that's saying. But the bigger problem here is, why does it say 12/16 when this says 12/6, 12/6, right? Yet it's the same numbers, the same exact numbers. I mean, there was buying and selling between the 6th and the 16th. The price went down. So is this supposed to be the 6th and User of Intellect is sloppy? That's what I think, but I can't prove it. So that's another thing there. Shares on AMC shares on Apex Clearinghouse should be in the 1% to 3% range and not more. Okay, again, that position cost distribution is for the entire market. It's for all the exchanges. So, nothing burger. This is not anything. So again, number of shares on Apex, that's not what it is. They're assuming that it is. They're literally reading what Webull says about the position cost distribution. They read it, they copied it in, and then they are disregarding it. So that is the level of intellect that you're dealing with here. Somebody who can't copy numbers properly, who obviously did not check these percentages to make sure they're accurate, because they aren't. They're not. And we can see the same thing for GameStop. They use the same numbers. Case studies 12/16. We come down here. $4 million, 5.23, 12.4. 4 million, 5.23, 12.4. It's the same sloppy work. User of Intellect is either a shill or an idiot or some combination of both of those, because they have fooled so many people. And this is ridiculous, because you come on Twitter, and there are people that are calling people like this out. There are some people like AlgoHack here, but they got called out. User of intellect got called out. Can you explain what the Webull API represents? If not, it exposes the absurdity of this DD. No, they didn't respond. No response. No response, because they can't. They can't define it. They have to just make an assumption. That's all that they can do. Make an assumption, make an association. That's all they've ever done. Whether it was for the Say Technologies vote, which I busted, I reverse engineered their equation. I showed another example, and I showed how it was absurd. It was an absurd extrapolation. It was abuse of statistics. It was most certainly abuse of statistics. That video is unfortunately lost to the annals of time. But anyway, this is the kind of nonsense. This is the kind of desperate confirmation bias, terrible DD. It's not DD. It's not DD when you start with your conclusion. When you start with your conclusion, you are not even trying to be objective. Not at all. You're not trying to be objective. What is T plus infinity? How does that work? T plus infinity. Where does it even say anything about that? It just says it in the beginning, the introduction, and the conclusion. It concludes naked shorting. Nothing indicates that. A lot of this stems from the lack of understanding of share turnover. The lack of understanding that, hey, you had on a day like, let me get my volume indicator on here. And this may not be accurate, but it'll be close enough. Let's see, we need to turn this. Don't forget that you had, let's just look at right around the end of May, beginning of June. What were people saying when there were 705 million shares traded on May 27th? Did anybody raise an alarm and say, wow, this is illegal? They're naked shorting. Wow, oh my God. No. Did anybody say it on May 28th or June 1st or June 2nd? Or any of these days when the trading volume exceeded the float? It exceeded the float. Did it? Did anyone? I mean, I was in tune with this stuff then. I don't remember people saying that. All I remember really was this is not the squeeze. Keep holding, yada, yada, yada. So, and that didn't really work out for a lot of us. So, share turnover does not indicate naked shorts. It doesn't indicate synthetic shares. There's no such thing as a synthetic share. It's never been demonstrated. Nobody can define it. Nobody can show it with any type of evidence. The only thing that's synthetic that could exist is a synthetic position, which is a simulated position that's created with options by buying and selling a call and put, buying a call, selling a put, or buying a put and selling a call, depending on which side of the market you are on. But those are options. They're literally not shares. They are options that give you the right but not the obligation to buy or sell shares at a given price, the strike price, by a certain date, the expiration date. But they are not shares until they're exercised. And that type of option simulated position, simulated long or short position, by using options, probably won't be executed, because the whole point of that type of position is to simulate the profit and loss curve of either being long or short shares without actually having the shares long or short. So by buying an option way out in the future, it's like a leap. You can simulate the profit and loss characteristics of owning 100 shares of stock. If you buy at the money and sell at the money, each contract, your at the money contracts are going to essentially mirror the P&L of the underlying stock. So, but that's an option position. It's not a stock position. It's not something that can be borrowed or returned as borrowed shorted shares. It's a completely different thing. It's not the same at all. I don't know if that's what these people are talking about. I doubt it, because they're literally talking about counterfeit shares as if it were counterfeit money, as if it were dollars that they printed on their Canon inkjet printer and passed as genuine currency. But these are shares somehow, even though there are no physical shares. So it's a catch-all conspiracy theory. Synthetic shares, naked shorting, married puts, abusive settlement dates, or infinity loops, T plus infinity. I'm not even going to address this hedge fund guy here talking, because I listened to it. I think I'm not going to say he's wrong or right, but it sounds like he is not really with the times, from everything that I've read and heard from other hedge fund guys like Mark Cahotis, other short sellers. So, whatever. If I listen to every old guy talk that pretends like he knows, talks like he knows what he's talking about, and that it's relevant to the situation, no, I don't have time for that. It's just one of those things. But anyway, I can look at the data. He doesn't cite any evidence. Okay, that's the big thing. He cites no evidence. He just talks. Great. That's awesome. Okay, Buffy. I just don't trust Trey anymore, and unfollowed Matt a while ago. Yeah, I mean, I don't either. I haven't seen anything from Matt Kors in a while. He doesn't come up in the search results that much anymore either. And he's talking about crypto. He's talking about Ethereum. I don't even, let's see. Yeah, and Trey, Trey is, you know how I feel about him. But he's not even talking, Matt's not even talking about AMC anymore. Look at this. I don't even see it. I mean, 10 days ago he mentioned it, but normally he's, how far do we have to go down? Ago. I mean, maybe he does in his live streams. I'm not even seeing long live streams on here. A couple hours. He's not doing his all-day thing anymore. Market panic over. Spoiler alert, no. Yeah. It's not too much there. So, what about Trey? So he shaved his head. What is that? Some kind of guilt thing? Like, oh, if AMC doesn't moon by January 1st, I'm going to shave my head. That seems like kind of like what it is. I don't know. It makes him look even more devious, or I don't know. AMC reached fundamental value. I mean, how does that? How do you know that, Trey? How do you know that? And then he's been doing some of these funny videos, like, or quote unquote funny. Something to do with a game, huh? Oh, okay. Well, I know that he is. He was doing like commercials or something for a game. Is AMC going up or down next week? That's a good question. It's a good question. I don't have an answer for you. I don't know if it's going up or down. But what I can tell you is if you are options here. If you are holding these 140 strike options here, calls for the 21st, which there's 200,000 of them open, you're probably going to lose money on those. In other words, is it going to go up substantially or down substantially? Probably not. Probably not. If Trey is bullish, it's going down. Good point. But they're always all bullish, because I saw earlier, what was it? I think it was a creative investor, Tyler. Where is it here? No, I'm sorry. It was Benji. Was it Benji? It was one of these guys. So here's Benji. Retail is not selling. Confirmed. MOAS incoming. And then Tyler, creative investors, future millionaires. The week ahead is going to be wild. And then there's one that's, let's see. It's the description. It says something like, AMC is looking great, and it's about to rip. Okay, all right. Awesome. Things are lining up. Algo exposed. Major events. I can't find it, but maybe it's this one. Stock J. Huge AMC update. AMC is doing fantastic, and it is set for big moves. So, I mean, why AMC may beat $1,000 soon. How long have they been saying that? How long have they been saying this shit? I mean, really, if you believe this at this point, sometimes you just have to learn by losing. And sometimes you don't learn by losing. But that's a way to learn. It may spike up on the 21st. It may, it may not. I don't know. But it's not. You're not going to get anywhere close to that 140. You're not going to get close to that 140. And that's another reason. That is another reason, or that leads into another reason why this stock is different than last January. And I would have to get on Thinkorswim, I guess, to look at the option chain from back then. So let me fire that up. but it's worth doing so I can demonstrate it. So does that mean that you? So does that mean that you, Sergeant Baloney? Does that mean that you took profit on those roughly 1,000 shares? You had 1392. Columbus sailed the ocean blue. Now you have 444. What happened to the 1,000? What happened to the 1,000? That's my question. Do I think GameStop is a better play? Probably not. Probably not. Although the float's lower. So people like that, I think, go on Superstonk. Go on the Superstonk subreddit. You'll get all the GME stuff, all propaganda. But I think so I don't think that either of these. So they like to say that these stocks are crash proof and all that kind of nonsense. But really. So here's the S&P compared to AMC, if it'll load. Daily, if it'll do it. Here. So obviously we can see some correlation here, but we're not going to see it here in June during this run-up period. We're not going to see the correlation. But at this point, you do. Boop, 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 boop. Up, down, up, down. So it's not crash proof. There's no, that's just, and I don't think GameStop would be any different. Now, the GameStop people would disagree with me, but, they also think that Ryan Cohen is, the second coming of Christ. So, now, what about the Shiba Inu? You bought $10,000 worth of it. So what's it worth now? Have you lost money? Have you made money? AMC is going to be accepting that soon. AMC is going to be accepting Shiba soon, but they're not actually accepting it. Their third party payment acceptance firm, BitPay, is accepting it. They accept the Shiba, the Doge, and the Bitcoin, and they turn around and give AMC cash. So it's like foreign exchange conversion or something, more like that than, because TMI was talking about this as a catalyst for this year. Oh, they're going to be holding all this crypto and they're going to beat inflation and blah, 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 blah. With Shiba, not really, because they're not actually holding the crypto. They're not actually holding it. They are accepting payment via a third party payment acceptance firm, BitPay. You can look this up. It's out there. And I just looked it up earlier, so here it is from November. So they're accepting it through BitPay. It's just third-party payments. They're not actually accepting the actual coin itself. Bought $10 worth of Shiba, and then now it's around 200. So hey, yeah, there you go. There you go. That's the idea. I wish I could say the same thing when I bought it, but I ended up losing money, so. So I'm just getting this thinkorswim here up. So think back to AMC and this here. Coming over to this. We're going to look at the option chain. Okay. So what we can do is go back in time. So it's like we're a DeLorean here. We're going to go 88 miles an hour and go back in time to January 2021. So we can go to, oh, I don't know, January 4th. So now we're looking at the option chain as if we were sitting here on January 4th, 2021. So a year ago. And we can look at this and see, we don't want a weekly. We can see that and we're looking at all strikes. We are looking at all strikes. We can see that we have 50 cents up to 35. That's what we have for this monthly expiration. And we can see that June 18th, for example, look at this one. June 18th, 50 cents to $8 strikes. And the $8 strike, well, the 50-cent strike was, 175, 170. Imagine if you had that going forward. But anyway, if you had that one going into 72, oh man. Okay. Point being, okay, here's January 21st. This is the one we're talking about coming up this month. The January 21st, 2022 expiration. I mean, this one right here is only 176 for the. Okay, so I was looking at that one. 198 on the previous January. This January is 176. But still incredibly low. So, I mean, you have 22 is the highest strike price. What I want you to look at is the highest strike prices. So, as we move forward in time, we'll move forward to May 18th. You can see in June now we have up to 40. Up to 40, we have 119 contracts open. 119,000, I'm sorry, open interest. And I did a video recently. I did a video on this as well recently on this channel where I looked at these and in an attempt to explain this. So moving forward to May 20th, we can look here and see we still have 40 as the highest strike. We're getting a lot of open interest here. And remember that when we go into June 2nd, this is going to go, these are all going to go into money. These are all going to go in the money, and that will force that hedging, the delta hedging, that will just push the stock price up even more. So, all of these. So here's 40 here. Now, the strikes did expand after that, but just at least on the second. Let's look at that. Second. Go. And this is the 18th, but we could look at the weekly, but I'm not really too worried about that one because you got a lot of volume here on the 40s, and you had a lot of volume there. But in terms of open interest, if you look at the 18th here, this should be a lot higher. So on the 40s, 214,000 with 206,000 volume that day. So these are all in the money up to 62. All these in the money. Now look at the strikes though. They've expanded to 120. This is the highest price that AMC had. The strike price has expanded to 120. And if you look every time after this, let's look at July. I already passed it. I already passed the monthly. So let's just go to August. We'll go to August. August monthly. 145, 54,000. Highest open interest every month. From that point on, the highest strike price had the highest open interest. The apes could not resist buying these lottery tickets. September monthly, 80,000 open at 145. Keep in mind, what's the price doing? It's going down, 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 down. So all that premium lost, given to the market. Talk about how the market maker is hurting. No, you're funding them by buying these cheap, out of the money, deep out of the money call options. It literally, is antithetical. Here's October, 32,000 on the 15th. Let's go closer to the 15th and see. Okay, so 37,000 open at 95. It's only at 95 now, but don't worry. Don't worry. We're back to November. We have 95 again, 20,000. Go to December. You see where I'm going with this. December 17th is a monthly. We are back to 145. We're back to 92,000 open interest, and that's on the 13th. We go closer. 95,000. So these are already worthless. Already worthless. They're practically already worthless the week before. Okay, so high open interest on these out of the money. 95,000 of these expired worthless. Now, if we were to go back to June, let's go back to June. We're in June now, and we're looking at the December options. We're going to look at the December expiration as if we were sitting there in June looking. Okay, these 145s. There's already 2,000 of them open with 729 of volume. But look at the prices. $1,860. That's $1,860. So somebody has, there are 2,000 of these contracts already open. 729 traded at these prices. So, and this number would accumulate to 95,000 between this point and December 17th when this expiration occurred. So the point is, this is a lot of money that was thrown away by the retail investors. They thought it was going to go past 145 at some point. So these were a sure thing lottery ticket type of trade, which didn't end up panning out. So as it stands right here in June, these contracts were worth $1,800 a piece. A lot of them expired worthless because they never reached these levels again. So they were either traded out at a loss or they were left to expire worthless, which is like taking a 100% loss on them. So that's not good. Now, what do you have happening now? Well, you have the same shit. Same shit happening now. So on the January 21st, you got 182 fucking thousand 145s open. 182,000. That's ridiculous. That's ridiculous. So this is the current option. Let me get to the actual. This is the current option chain. This is like, we're looking at it today in real time here. Well, it's Sunday, so not really, but futures market opens in an hour. But 197,000 open. And, look at all these out of the money. These numbers need to be shifted down. It needs to be high. It needs to be high open interest at the money. At the money, not out of the money. Because these will never get hedged. They will not. They're expiring worthless. 99.9% chance they're expiring worthless. So there you go. I mean, there's 2 or 3 things there. The strike price is expanding. Also, just the sheer number of open interest at these levels. They cannot restrain themselves from buying these, what they perceive to be lottery tickets, but they're not really. I mean, I guess maybe they are in the sense that most people don't win the lottery. For most people, it's a waste of money. But it's just not advisable. So way. Any other questions at this point? Trey's talking about IWM being shorted. 114 million shares out of 308 million outstanding shares. Yeah, when you get into ETFs, that's getting really complicated. The number of shares in these ETFs is dynamic. It's not the same always. That's why if you go to something like FinViz, I believe we're not going to see. We don't see shares outstanding. We don't see shares float. We don't see short flow. We don't see any of that stuff because it's dynamic. It changes. They have. I looked into it once and learned about it, but it was too confusing. But you see that on all ETFs. If you look at the SPY, you'll see the same thing. Even though if we go to it on Chart Exchange, I actually am not sure what this will show, but we'll see. Go to stats. So we do see short volume there. So we can see percentages. Short volume is 60%. Now what is Trey saying here? Sensationalist stuff. 114 million shares out of 308 outstanding shares. Okay. That must be short interest, but here, but anyway, point being there, the float is fluid. It's dynamic. So you got 308 million outstanding right now. But that could change tomorrow. News on here on this. Oh. Again, if you go to volume, stacked bar, and turn on the price, you see some pretty good correlations. You see some pretty good correlations of price and short volume. So you can see higher short volume, suppressed price, vice versa. And like everything else, you see higher off exchange short volume, and you see higher off exchange volume in general. That's just the way the market is now. It's the way the market is. Largely because of algorithmic market making, electronic market making, etc. And a lot of people don't want to hear this, but there are advantages to retail investors for this as well. And you are protected by the national best bid and offer. So the reality is small trades don't move the market. Small trades don't move the market. It doesn't matter what venue you're in. Small trades are not going to affect the market. So anyway, for that matter, we could look at any other popular stock. Oops, got to spell it right though. And see a lot of the same things happening. You see 43% off exchange. You see, let's see. Anywhere from 40 to 60 plus % short volume in a given day. Past 30 days, average short volume for Apple, 54.6%. See a lot of the same type of stuff here. Let's see. Well, let's look at GameStop. So 44% off exchange, right in the same thing. 37% 30-day, 30-day average. Volume 50 to 40s to 60%. So this is GameStop. Let's go to one that's, how about one that's not really a meme? How about Walmart? So here's 32% off. Wait a minute, 32% off exchange. So we actually have slightly higher New York Stock Exchange volume on this one. Off exchange is mainly higher. It's mainly higher. Short volume. And you're looking at like 20 million is a high day for this stock. But you're still looking, you're looking at 20s to 40 short volume. 60s, and that's short volume again. So you're always going to have it. Doesn't matter really what stock it is. There's always going to be short volume. It's always going to be short selling. So you're never going to have all of those Where is it? 89 million shares that are currently short on AMC. Never all going to be covered at once, which is, I believe, what Algo Hack was trying to get across to somebody too. On, but I closed the tweet on that one. Citadel overnight last night around 2:30 a.m. Oh, here we go with pictures of the Citadel building again. That's awesome. How does, what do you know is happening in this building? You worked overnight last night, so they don't work overnight ever. Notice the FUD increasing by the hour. I don't care if your balls are wet. That's disgusting. Disgusting. Oh yeah, let's look at all the options. Like 538,000 open out of the money interest. That's nice. You have when you have the AMC, when you have the YouTuber influencers just completely ignoring returned shares and saying things like shorts haven't covered, like Short the VIX likes to say. They all say it. You're sitting there telling me that shorts have not covered. They are not covering. Yet there's returned shares. This is a low amount of returned shares. You usually have at least a couple million. You have returned shares every goddamn day. You have borrowed shares every day. Sometimes you have a net change up. Sometimes you have a net change down. Those returned shares represent closed, covered, bought to close short positions. They might re-borrow a share and establish a new one, but that is a critical piece of knowledge that's missing from the ape community. It's annoying as fuck too, just on a personal level. It's annoying. It's like they're like drones or NPCs or something that can't get it through their head that, no, that's not how it works. It's not a constant accumulation of short positions that's going to go away at some point. It's a complete misunderstanding and lack of understanding and lack of curiosity about how this shit actually works. Because for most market participants, the goal is to make money. So you're going to do that. You're going to make money. You're going to, hey, if your short position is profitable by whatever percentage you want it to be, then you close that bitch and maybe open another one. But if you think it, whatever. But you don't just sit there and let the damn thing run away from you. Or become unprofitable. It's just not the name of the game. It's not why. It's not how participants. It's not what you do. So I don't think they understand that, it's not short and hold. It's short and close and profit. Simple as that, really. Why would, the thing that gets me, and this will be like kind of, I'm transitioning out of this, out of here because I gotta eat dinner. Starving. Let's see if I can find one. I don't know if I can find one here, but let's see. Well, short squeeze apes have forgotten a mission, market manipulation, blah blah blah. Like, we're gonna change it. You're gonna change it by doing something. But fake shares. How do you? There's no evidence for that. Come on, it's ridiculous. Share recount. Controlled squeeze. I mean, Lou was talking about that shit over the summer. AMC stock just took down another major hedge fund. It's starting. Okay. Oh, really? Okay. They took down a hedge fund because the price was kept up so high. Like it really just hurt them. It squeezed them out. Like what? What? I, I, how can you possibly believe that? How could you possibly believe that shit? Unless you don't know, like, unless you have no clue. I don't understand. Don't understand. Okay, Al from Boston. One of the biggest, I mean, come on. Like, this is just nonsensical. Bullish as fuck. I told you so. Confirmed synthetics in the billions. No. Not. Not confirmed. More proof. We were right about the fake shares. No. You just don't know how to fucking read. You don't know how to fucking read. Jesus. Like, nothing in this reveals anything. Nothing. Just what it reveals is that these people are incapable of understanding position cost distribution. Basically, that's what that means. I have 220 shares of AMC and Webull. How fast does it take to transfer to Fidelity? I think it's I don't know, less than a week. Look, if you're worried about anything happening in the meantime, I don't think you really have any reason to be. I don't think that you do. I think that you have time to transfer to another brokerage, transfer to a real brokerage, get the hell out of Webull if you want to. I don't really care what people use, but there is a hypocrisy. Okay, there is a hypocrisy that comes up when apes talk about off exchange or quote unquote dark pool trading. They talk about the dark pool, off exchange, OTC, whatever the fuck. They talk about that not going to the lit exchange, and they use Webull because Webull is payment for order flow. And I don't have a problem with it. I don't have a problem with payment for order flow. It is the way the market is now. It actually can be beneficial to retail investors, not if you listen to the propaganda from AMC YouTubers. They would have you believe that it's evil and that it is, inherent conflict of interest and all this kind of stuff. There may be some validity there, but by and large, it actually benefits retail investors. But beyond that, I don't really, it doesn't matter to me what anybody uses. But the thing is, it really kind of, it's like, it makes me scratch my head. How can someone sit there and bitch, like, especially Trey and these guys, they all use Webull. They sit there and bitch, short the VIX. Perfect example. He sits there and bashes a dark pool. He talks about off exchange and how manipulative it is and how it's manipulation. But he's using a payment for order flow brokerage that routes the fucking shares off exchange. They don't route it to the exchange. So, what else can you say? You're a hypocrite. Shut the fuck up about dark pool, or get the fuck off Webull, or just shut the fuck up in general. If that's what you are doing. Like, and I'm saying that to these guys, not anybody here. I'm saying that to, Trey, Matt, Short the VIX, fucking creative investor. It doesn't matter. It doesn't matter really what brokerage you use. The main thing, more importantly, is what price are you paying? Are you buying low and selling high? Or are you buying high and selling low? A lot of people bought high. And that's what this cost distribution shows. This is really what this is showing, is that most people Most shares. This is the actual way to use this indicator, which these guys have completely missed. 100%. They have no clue. Yes, we don't know whether positions were closed or not, but it doesn't matter for this analysis. So what they're saying here is, on the 6th of December, the price was $28.79. This number of, in the green, of shares were purchased for a price lower than that. So those shares are currently profitable. All the rest up here, including at all-time highs, including at 72, whatever, 69, whatever the hell it was. These are all unprofitable because the price is lower than what they paid. And the average price is $43.44, and the current price on December 6th was $28.79. So that's what this is meant to tell you, is that most of the estimated positions that are out there are unprofitable right now. That's what it's telling you. Not the fact that there's fucking billions of synthetic shares. It's just not indicated. There's no evidence for it. That's conspiratorial. I don't even know what to say. It's just ridiculous. It's ridiculous. If that's what you think about the market, and you've been involved in the market for less than, a year, certainly, you need to do some more reading. You need to listen to some other people other than the big 5 YouTubers, and you need to get off Reddit, because it's not how it is. Let's see. Would it be safe to keep in Webull if my target is around 5K per share? I mean, I'm not sure where you're getting that target from, but that's up to you. Webull is, I don't know. I'm not sure. I don't know if it's safe or not. I can't say. Can't say. I could say I feel comfortable probably saying that, well, my question is, where does $5,000 per share come from? And you don't have to answer this if you don't want to. It doesn't matter. But that's what I'm here to do, is challenge your assumptions, to challenge what you believe, because that's how you prove it right. That's the scientific method. That's what I try to use. I'm trying to, I have an idea of what, I have a thesis. I have a hypothesis. I think XYZ. Now, I'm going to try to prove it wrong every way that I can think of. And if I can't prove it wrong, maybe it's true. But I'm still going to, scrutinize it some more. So, in that spirit is what I say, why I say, where's that coming from? Is it realistic? What's the evidence? Again, this is hypothetical. This is for you to think about for whatever it is, whether it's a price target or whatever. But, I really don't think that the brokerage matters as much as people like to think. I have Webull account. I have a Webull account. I have a Robinhood account. I have an E-Trade account. I have a Interactive Brokers account. I have a Schwab account. I have a Thinkorswim account, or TD Ameritrade. I have a Fidelity account. So I have all these accounts. I don't necessarily use them all. Although, if you are trading on smaller accounts, lower capital, and you run into that pattern day trading rule, if you have more than one brokerage, hey, you have more day trades. You have to split up your capital between different accounts, but, so for that reason, I have used Webull to do some option trading, and I've been profitable. I've been profitable on Webull. I don't think that it really matters. The data, I'm not really happy with the quality of their data. There's really no reason not to use Fidelity, even if you don't use their brokerage, even if you don't fund your account. You can still use their tools. You can still create an account and use their analysis and research tools. There's no reason not to. They give you free, real-time, live data. Level 2 order books, all that shit for free. And there's no reason not to use it. So you may not get that with other brokerages. You may not get anything like on Robinhood. You may be hard pressed to even get a candle chart or Bollinger Bands or whatever it is, stochastic RSI, whatever, but just know that I don't think that, in my opinion, I mean, I've been profitable and I've lost. I've made losses. I've made profits on all those brokerages. So I don't think that really matters. But I'm also not trading. I'm not really trading short squeeze plays. I'm not really trying to, do the ape thing. So in that sense, that's not to say that I haven't. Not to say that I haven't, but I go where the momentum is. I go where the interest is, and I'm generally trying to follow institutions rather than fight them, and that's a big thing. You're not going to beat Wall Street. You're not going to beat hedge funds. It's just it's foolish to think that you will, really. That's why generally we try to go with institutions. Try to latch on to the momentum and ride those waves because there's more capital being thrown around, yada, yada, yada. I mean, it's not the only way to trade, but I mean, or another way to think about it is contrarian to retail. So whatever the apes are doing, I'm thinking about the opposite. They're going long. I'm thinking short. In other words, and Buffy mentioned that earlier, that Trey is like the quintessential uninformed investor. So you can go opposite of him pretty much all the time. And I learned that back in like July of this past year, so of 2021, because every time he said, the squeeze is coming this month, baby, yeah, it didn't, he had no clue. So, I really, it really never ceases to amaze me how dumb this DD always is. It's dumb. It's just ignorant. Position cost distribution is not telling you what they think it's telling you. And it's just ridiculous. How in the fuck do you get to this? How in the fuck do you get to naked shorts and infinity, T plus infinity, and loopholes and all this shit from the position cost distribution graph? Like, that's not what it's telling you. And this is the kind of shit that just never ceases to amaze me, because I look at this stuff and I think, oh my God, is it really possible that they have completely missed the point again? They're not even, like, they are completely disregarding one key aspect. They're overlooking an important, parameter. They're misinterpreting numbers. I mean, it just goes on and on. It is the most inept bullshit I've ever seen, honestly. I mean, it just is. But what if you're moving your account in AMC MOAS? Well, you know what? People have been saying that. People have been saying that for almost a year now. People have been saying it for almost a year. And, you know, they were saying it when the stock was, they were saying it a lot more when the stock was in the 60s. And it didn't happen. Now, that's not a reason to say it won't, I guess. But, you know, that I remember that was when Fidelity was, everybody was moving to Fidelity. I've been on Fidelity for years, so I didn't move anything, but have to move anything. But, you know, that was what everybody said. That's what everybody said, but, you know, I don't know. You do think AMC will MOAS sooner or later. I don't know how high, but I believe won't be higher than GameStop. Yeah, I mean, it's just the short interest just isn't there, man. It's just not. 17% short interest. I mean, unless you're going to go down like a synthetic share, naked short road. But, you know, like without any evidence, I don't even entertain that stuff anymore. I don't, you know. If you want to believe that, that's fine. Like, my grandma believes that Jesus is coming back to the earth to save everybody. Like, that's unsourced belief on faith. Hey, that's fine. You know, if there is a problem, I mean, if there is a, I'm sorry. What I have a problem with, or not really a problem, it's just, you know, hey, tell me that Jesus is coming back. Okay, great. You're free to believe that. Where's the evidence? And so it's the same thing with this squeeze. Where's the evidence? There's no evidence. I can show every time the apes come up with some harebrained, naked proof. I mean, it really is something that every time, just like they try to do with that Say Technologies share count over the summer. And user of intellect was the one who pushed that terrible math. Every time, it just does not connect. Just does not connect. However, you know, if you look down through here, see, this is the problem. You look down through this Reddit post, and this is the best confirmation of aggressively underreported short positions that I have seen by a mile. No, it's not. There's nothing in here that even hints at short positions. It's been 6 to 8 months since we've had this kind of DD. I've been waiting patiently for so long for something concrete like this to surface. Okay? My good Lord, that's good DD. Okay? No. I did not understand. Here is the kicker. I did not understand big technical parts of DD, but I understand that you did. Big job. Great job. Thank you. Another confirmation of synthetics is always welcome. Okay, so you did not understand big technical parts of the DD, but you are believing this as confirmation of quote-unquote synthetics. Okay? That's ignorant. This person, if you want to know my opinion, probably shouldn't be in the market. This person is incapable of making, you know, these types of determinations. I mean, I'm sure they're a nice person. I'm sure they're a wonderful person. They sound like a lovely person. But if you don't understand something, especially big technical parts of it, why do you accept it from an anonymous source on Reddit and not even on the off-brand AMC Stocks subreddit? Okay? Like, I don't understand why you think that's good, why these people think it's good, when people like this, okay, believe wholeheartedly that they are going to be rich, they can get rich quick. You've bought into a scam. you have bought into a scam. It's a con. You used a lot of words, so you're probably right. That's all the DD I need. See, there you go. Maybe they're being facetious. The shorts are fucked. That's some good shit. Yeah, I would beg to differ, but you know, not trying to sound weird, but why isn't this in the main sub? Automod removed it. Okay, absolutely mind-boggling. It's all here in the code, in the raw numbers. This is the Matrix, and you, good sir, are Neo. It's not really mind-boggling. It's just that you don't understand what the position cost distribution is telling you. So, yeah. Now, I don't know if there's anybody that challenged this. So does this mean we can unofficially count the float ourselves? I find it difficult to conceive that Webull, being only broker, possessed 42% of the float for AMC. No. It doesn't, because it says Webull's thing says right in it. It says right in it that it is that they look at the 13 exchanges. So no, it's the entire market. Now I don't know if they look at the off exchange stuff. Maybe they don't look at the off exchange stuff, but so assume there are still people in Robinhood, other terrible brokers. Let's say another 30 in Robinhood and Fidelity. I mean, Webull has 10 times the realistic amount of shares. All the other brokers, see, they're all assuming that this is just Webull, and you know, I mean, you have to disregard what they say about it, which is ignorant. Well, that's good. You're not trying to get rich, you're trying to make a bit of profit. There's nothing wrong with that. But there are a lot of, so you are a rational person. You're not delusional like a lot of these people are. Now, so that's more of what I'm trying to dispel, is this notion. Let's see what I can show you here. Where is it? Brush it. But a lot of you know, you get on Reddit, you get on YouTube, you get on Twitter, and you see stuff like, where is it? I just saw it a little bit ago. This one, I'm sick as fuck, probably have COVID. I'm not here for politics. I told my spouse, if I am to die, do not sell my shares. Let the squeeze vaporize the hedgies, because fuck them. Going to ask her to print the ownership off my broker and bury them with me. Today's my first day of symptom. I mean, yikes. Let's see. Well, you see all this nonsense. 1.3 million. 1.3 million. Now, okay. Yeah, that's not really how it works, but okay. Got deleted. Here, AMC floor is 1.3 million. How do apes guarantee that the little apes can sell at that ask? Well, I mean, that pretty much says it all. Pretty much says it all. Somebody peddling hopium for end of the month here. You know, it's just I'm glad that you're not delusional, but there are a lot of delusional folks. There's a lot of delusional people. And a lot of people, I mean, you know, I've seen on here and other places, talked to, who have really stretched themselves too thin. They've screwed up their, finances, yada, yada, yada. Um, there's no reason for that. There's really no reason for that because it's irrational. It's emotional. It's uninformed. What else is there to say? It's uninformed. So, let's see if there's anything else worth looking at in here, but I have a feeling they're going to continue shorting AMC to a level so low, which will suddenly trigger huge buying pressure from people who recognize a deep discount on this squeeze play. But that's not how it works, though. First of all, your feeling, there's no room for that here. Fuck your feelings. But huge buying pressure from people who recognize a deep discount on this squeeze play? No. They recognize that short positions are cyclical in nature. They come and they go. Get bought back and they get sold again. And, that's how you end up with 60 times the float traded, which is another thing they don't understand. But good feeling, can kicking is coming to an end. So when you see the feeling stuff, it's, let's see. Also, fake squeeze. You hear fake squeeze. Lost most of my gains. Do I worry? Absolutely not. I know our AMC stock is worth more than 100, more than 500, more than 1,000. Easily. Hedgies are just getting ready for a fake squeeze. They are desperate. Been here since January. We hold and buy. They have no way out. Oh, okay. They have no way out. They're trapped. They are desperate. Do you not understand how short selling works? I mean, what the fuck? This is the delusional shit that I'm talking about here. Perfect example. No way out. Yeah, they can return shares like they do every fucking day. Cover their positions. And they can take profit, which is what they know how to do. So, anyway. No dates, but 2 dates. Okay. Breaking news, shorts still have not closed their position. I am a no sell type of gal. No sell, no prison cell, no sell. That's cute. Okay. They like to you play semantics with closed position, covered the position, fake cover, covered with synthetics. I mean, come on. If this is the first time, if this is the first, if you just learn about this shit, I hate to say it this way, but if you just learn about this from here and have not been familiar with this before this phenomenon this year, last year, you fell for a scam. You got conned. This is completely false. And nobody's going to jail. Apes might go to jail. They could. Actually, I don't think that so. I don't think so. But I mean, clearly there's, I don't know. In my opinion, this is not what it's supposed to be, but whatever. Love is the answer. Okay. So this is like here you go. Here's somebody. It's the battle of Jesus versus Satan, light versus darkness. I'm going to keep plowing paychecks into this. Not financial advice. Okay. Wall Street Bet shill talking. So yeah, time to start complaining to our brokers. What, that you're not rich yet? I'm not rich, but I've got deep 6 figures invested with them. Well, that means nothing. Sorry. Like, that's pocket change. I don't care. I'm going to start asking them what they're doing to protect investors from predatory hedge funds. They're going to tell you that you can make better investment choices. They're going to tell you that. They're going to say, quit thinking that you could go against people with more money than you. It's like facing a dude who's twice your size in a fight and honestly thinking that you have a chance, and then being confused and pissed off when you get your ass kicked. Bad. It's really kind of like that. Is it fair? Hell no, it's not fair. The world isn't fair. It's not fair. And if you think it's going to become fair, you're going to do it through the capital markets. It's over. It's been over. Of course. Squeeze the inevitable. It's over. It's been over. It's in the hands of the FBI. Right, okay. It's in the hands of the FBI. No. Probably not. And this is the pyramid scheme aspect of it. How would you convince someone new to invest in AMC? How would you? Well, don't try to convince them, because it's going to come off like a pyramid scheme, Ponzi scheme. Well, this kind of shit happens all the time. You're just noticing it now because you're paying attention. That's all. Trust me, it's happened. It always happens. How do we expose the SEC? For what? What have they done? What haven't they done? Keep that one. If you keep that mentality and try not to adopt this hard-headed, know-it-all attitude, narcissistic attitude of these Reddit apes here, you'll be better for it. That's my advice. Assume that you don't know. That's what I always do. And then I need proof. I need evidence. I need to find it. I need to evaluate it. I need to make sure it's good from good sources and all that kind of stuff. And that's already steps ahead of what's happening here, because it's just emotional stuff. You know, class action lawsuits. You know, here's a class action lawsuit. Great. Want a revolution? Take your money away from them. That didn't get too much upvoting, but I've thought about that before. Yeah. Okay. So here you go. I started investing in the stock markets last year. Boy, it's been a rough learning experience. All that, yeah, am an investor optimism has gone and been replaced with this is all rigged and I hate it. Likewise, my diverse portfolio has gone and been replaced with one stock, AMC. Partly because I believe in the stock, blah blah blah. I mean, okay, partly because I believe in the stock and the business, partly because I don't see the point of investing in anything else until some real change occurs. You're missing the point. You're missing the point. You're not going to make change that way. All you're going to do is lose your money, and that's going to reinforce what's already happening. And it's going to make you jaded, and you're just going to quit. Like anything else, you're just going to give up and be like, oh, that's rigged. It's a scam. I'm UK based and would like to lodge a complaint about the America markets. I see lots of old corrupt American politicians making more and more money from the misery of their people. With all the DD done, with all the giving off and tweeting and the likes, how to get real change. Well, you know what? We told your country to go fuck itself. That's how we created real change, honestly. At one time, you know, we... I don't know. Can we create and organize a team to get our own to get heard by the right people? To put pressure on inside trading and corruption. Inside trading. What do you mean by inside trading? Inside trading. Insider trading? It's not. Most of it's not illegal. At this stage, I'd happily contribute to have people to go to Congress, put up billboards, and fight for the rights of retail trader. Not just on the sub, but all the stocks that are repressed and manipulated. You American traders aren't investors. You're voters as well. Of course, yes, but talking about capitalism. And capitalism may not inherently be the most democratic system that there is. It may not be compatible with, you know, a lot of these concepts. We've gotten better over the years. It's certainly better than it was when we started this thing. You know, we don't have human slavery, for one thing. And that is a capitalist concept. So I think the better way to do it is, you know, but the point, there's also something to be said for the fact that, you know, the markets don't need retail investors. They don't as much as they think that they're needed. So if people leave the markets, is it really going to change anything? I don't think so. But in terms of the problems that we have in like our society and our democracy, our style of capitalism, I don't think that this is really up there with some of the bigger problems like, you know, homelessness, you know, in our country. And if you're not in this country, I guess you wouldn't see that kind of thing. But, and I don't. I would not. So Yeah, be careful with that bull market. This is not the bear market. We are not in the bear market yet, my friend. I don't think you have a lot more downside coming in general. Uh, so, yeah, I don't know if it's a good time to buy or not. Depends on what you're talking about. But, yeah, well, actually, the futures market is about to open. See it yet, though. It'll be interesting to see what happens here. But 10 minutes delayed. I guess we can go over to Tasty Trade, though. What is all that? What is all that noise I'm hearing? It's okay. Okay, let's see here.
Yeah, absolutely. They always have been. That fear sits on the uncertainty of the upside yields, especially where we've been. So it'll be interesting to see this week. For me, it'll be interesting to see if that longer end piece really starts to get back to what we've always, where it's been the bigger beta, the higher moving piece of it. So we'll see if that follows through.
Well, they just opened, and it looks like the S&Ps are only up $1. They opened up $3.50. They got the wrong font size on there.
I know. I'm sorry about that.
Yeah. The S&Ps are up $2 right now. The Nasdaq's up 12. Russell's unchanged, and the Dow's up 30. That's the opening print. Now the S&Ps are up 5. The Nasdaq's up 13 or 14, and the Russell's up 2. And let's see where they open the bonds here tonight. They opened bonds down 8 in the 154 handle. And they opened the notes down 2.5. So that spread's pretty much the same. And
wow, that's a big move down in bonds for.
Well, none of the other markets tonight are. None of the other markets are that interesting yet. But again, I'm telling you, Pete, if you're the trade was pretty decent last week. The two-sided trade, the market was all over the place. Vol was good. We're getting 1%, 2%, and 3% moves intraday. We were getting at least close to 2% intraday moves in the Nasdaq, which is almost 300 points. So there was I mean, you could pretty much you couldn't trade Nasdaq futures for 10 ticks last week. I mentioned that to Tony. I mean, they were a 30-40 handle move on the smallest move. But that's about the ugliest week that we've seen in the Nasdaq. And you'd have to go back all the way to the, I think it's the ugliest move we saw in the last year.
Yeah, on a percentage basis, absolutely. Yeah.
And so I think that is a tell for the year. I do not think that 2022 might be the year that a lot of companies do pretty well, but I think that there's going to be a reset of asset prices. I'm looking at what happened in the SPAC marketplace. I'm looking at what happened in the IPO marketplace. I'm looking at what happened in everything except like some of these major stocks. And I think that, it's a pretty good tell.
Yeah, it seems like it. I think that update we had on Monday was kind of that last gasp trap a little bit. It'll be interesting to see. This will be, I think, a lot of times for me, that first week is always a little bit of ping pong. We saw it in crude. We saw it in the dollar. We saw it with the up move here, as you said, for a day and then the break. It'll be interesting to see if we follow through on some of these to the downside here as we roll into the second week.
We got a little bit short crude oil last week, over 80. So I'm not too upset. I mean,
no, that was a patience trade there. Yeah,
it was. We did show a little patience.
Yeah.
I did it small. It was the beginning of the year. I didn't want to get knee deep in crude oil and start the year off chasing it back to 100.
Alright, it's dinner time. Or something. I'll catch you all later. Thanks for hanging out. Peace.
Check.